Good morning. Right. So yesterday was buy the dip. Today, I don't think that should be the case. See here on the hourly chart, the drop down to support there. Obvious place where buyers were going to be and to buy the dip down there. What time that happened? Go to the 5-minute. And we see it was around 11 o'clock rather than when typically what happened would be around 10:30, 10 or 10:30. This is why we use price patterns. And so at 10 o'clock, there was this consolidation going into 10:30, I should say, 10 to 10:30. And it wasn't at support yet. So as we do, we always combine various concepts. So a reversal, a 10:30 is a reversal period, around 10 o'clock is a reversal period. So that's one concept. All right. So reversal period, reversal from what? Uptrend, downtrend. Sometimes it's a breakout. 10:30, as I said, is one concept to pay attention to. But as far as buying a dip at 10:30, prices weren't at support at 10:30. So the consolidation, pivot highs as opposing pivot lows. What's it going to do? We don't know. You're waiting. And then I guess around, or not guess, at around 10:55 or so, it tried to go up and we got a little topping tail. So that would have been your signal bar. So then as it gets down here, it just happens to be at around 11 o'clock. That's not a reversal period per se that consistent over all the years, but it's down near price support. So you start looking for a turn at that point. All right. So now the dip was bought, prices rallied, and now they're up here. They pushed up into this resistance area, as you can see right there, and then they just kind of went dead for the rest of the day. A little buying into the close there, but buying the dip, consolidation at resistance. So now we got a bottoming tail bar. So when I said buying the dip should not be today, because it shouldn't go back down there. We've got a bottoming tail bar yesterday, which there was the opportunity to buy the tip. So the bottoming tail bar should not result in another opportunity to buy the dip, because that's a sign of weakness. Now, everything that I'm saying is theoretical and shouldn't happen. Of course, it could happen, but based on historical patterns, if things are as bullish as they are, as we can see, red bars being ignored, bottoming tails, and so on, there's no gap down today. There's actually a gap up. And, as I looked through most of the stocks here, especially the leaders, I was a little surprised to see a little bit of a lack of enthusiasm, so to speak, amongst the big stocks, considering Apple is up 10 here. And just looking at that, where it is at 212, it's up above the high. So that's a nice gap. And now we'll see if it can hold, if there's, to buy the dip. Can it hold any pullbacks into this area, 206 or so, 27 right here? If it comes in, ideally, as bullish as it possibly could be, it won't. It'll build up some support and continue to go higher. Now, back to the spiders and that bottoming tail bar. Prices are around 295. You've got the next 295, right? Going to open up around there. The next whole number, which shouldn't be that big a deal. And as we talked about yesterday, and those of you on YouTube, we couldn't get on here. It was a technical glitch, but we're back. 300 would be a target area based on this uptrend. And there's nothing at this point to suggest that's not in the realm of possibilities. But we want to see if this bottoming tail bar is going to follow through now. So any little pullbacks here should be minor. Right? It shouldn't be any big dips, let's just say. If there's going to be a dip here, it should be a minor dip where buyers step up in this area here and then willing to take it higher based on that daily chart. Going to the Qs, they didn't come back so aggressively, but they did come back. coming up into the resistance, and now they're at 191-ish. Really not impressive considering this gap up in Apple, but it is getting up to near the highs here. So the question is, next concept that we use, up at resistance, what's the reaction to it? And the reaction should be pretty bullish, meaning it goes sideways here or just takes off to the upside. It should not pull back deeply, right, into this area here, right? And I'll just quantify again, anything's possible, but a dip down toward 190 should be bought aggressively, based on these chart patterns. So we'll see what happens there. But the most bullish thing you should do is either just take off here at the open or consolidate a bit and chop around, maybe for 15, 20 minutes, we'll see, and then push higher. That's what the patterns are telling us. The Russell hasn't been able to get going, was another dip as it's up here at this resistance area. We've got another bottoming tail bar, so buyers are still stepping up here. It hasn't been able to break out, but the chart says it should be able to do that. Now it's got to get moving. I think you have to, like I said, even with this bottoming tail bar, there shouldn't be another big dip, because the longer it spends here, well, the more we have to question what's going on. So, every day is a wait and see. We look at the time frames, higher time frames, lower time frames, and as we already covered, the weekly time frames. Let's go back to the spiders. While making new all-time highs, they've had a hell of a run. Maybe they can get to 300. The Russell here has been the underperformer, and that's where we think the opportunity is, where the underperformer can play catch-up and bring up the rear and push up. And that's similar to the mid-cap, which is a little stronger. But in any event, they tend to move together for the most part. So if one goes, the other should go. So that's what you want to be looking for. If the mid-cap and the Russell can start moving up through their respective resistance area. So, if this can get through 159, 50-ish, 60-ish, it should keep going. Transports, the underperformer, but the dip was bought and everything else. And as you can see, as it comes down into an area, it's an area, we don't look at things as exact points. Buyers should begin to step up, and they did. And so the buyers will step up. And you can see this gap fill, and then here they try again, and now it's broken this little downtrend on the 60-minute chart, which is suggestive that it can continue to go higher. There's your mid caps, which are in a trading range. They're trying to get going here as well. They pulled back into support, and that was bought. Futures here, not doing too much. They had that buy the dip yesterday, run up, consolidate. They're pulling back here a little bit. As I said, the dip should not be that large, but they're pressing right up against these old all-time highs. So, we have to put patterns within the location that they're at. So far, things are acting bullishly, but really slow. Qs, same story, pretty much. Chopping around, still bullish. They dipped down here, came right back up. They're consolidating. The assumption is they'll go higher, 7,900, 8,000, big numbers here. And it's been a heck of a run already. Dow, bit of an underperformer, but same story, up against resistance. Bonds up here a little bit. I'm going to keep an eye on these to see if they can get going to the upside, which are going to bring yields down. That could be a problem. And gold, continuing to underperform. And lastly, oil. It broke the uptrend. They're consolidating, and they're weak. It's weak here. We'll see what happens. That's it. Short for me. Off to you, Dan.
Hey, good morning, everyone. Let's take a look at our opens. I see our Marriott actually has a nice gap up here today. We have two positions. We have a covered call and put spread. So that's nice. We'll be tightening the stop on that. Sit, we're long stock. ACB triggered yesterday. Topping tail, but we're in it. CGC covered call and put spread for Friday. Michael Jackson put spread. Twitter, long stock. Or actually, you know what? That stopped us out yesterday to small profits. Let me get rid of it. Fizzler, I see a little print here, gapping up 62.14. We're in it at 62. So that will be good. Netflix, we have a half lot of put spread, gapping up. Looks good. We'll tighten the stop. Lyft, we have a put spread that we intend on holding over earnings because it's way out of the money, the 52s, and we'll have a fantastic cost basis even if we are assigned. But it's a core trade. New low failure here, retest, extended on the weekly. BA, we got into yesterday. Try was a beautiful no-brainer yesterday. This is nothing. I had, Greg found this one the other day, G&K, and I was wanting a 1, 2, 3. And we didn't get it yesterday, just kept powering. And that's the, you know, when you have a bullish intraday close, like it was on the 15, look at this. This is that initial wide range breakout bar. That's a bullish 15-minute chart, you know, all the way from lunchtime into the close. That's a bullish consolidation. Those are the type of wide range bars that you can buy over the high the next day. So we missed on that one. Let's look at gappers here. We got a bunch of them. Win is not earnings, but it's in the news. I read in the journal that it's got a state license in Massachusetts. But it does have earnings coming up. No great pattern there. Staff 216, big old gap, but it trades like a penny stock toy. RCL, big old gap. That's a bullish pre-market too, but it's kind of excessive to me. Up over $6. Same with NUS 60.39. Way the heck up here. Gap's excessive. Zen $85. Bearish gap. 30-minute low, call spread candidate. Short term, because it's still a bullish weekly and monthly. Apple, we talked about in coaching last night. Put spread candidate, it's not a directional for me. It's gapping too big, and the monthly now, it's going to be up a lot. That's a bullish retracement. Vertex, I don't like bios. It's a call spread though candidate, gapping. Well, it's gapping up a little bit under yesterday's low. That's a bear call credit spread candidate. CLS, junk pattern. I can't tell where it's gapping. CBS, I posted this in our Telegram alert this morning, 56.85. If we get a bullish intraday setup, I like this, both for directional and put spread. I put it in this window right here. I got CBS here. I got Apple in the top. And I have a bunch more thumbnails on my other computer, of course. Garmin 8350. That's a nice bearish gap. I'm going to put that in this window here. What's wrong? GRN. There. For a bear call credit spread candidate, Humana 257. We got to come back to it. JCI I like 3890. It's a grinder here, but I like the bottoming tail. I'm going to put that in my window on the other computer here. MDU. Yeah, Ferdinand. Well, I sent it only, not to the weekly. I sent it only to the swing letter folks, because like I said, it's both a swing, it's a directional and income trade, and we don't do directionals in the weekly options trader. MDU, beautiful put spread candidate. MMP, it's kind of hard to tell where it's gapping. 630, it's a nasty gap. PBI. RDN, this is a churner, we call them, rising 20, 50, and it's just churning on up. C, it's a mess, maybe 30-minute high, tap. 62.74 way down here. So that's a bear call credit spread candidate, 30-minute low. Text, I can't tell, and it's a mess. Mondelez, beautiful. Mondelez, like that. That's going in a window. So nice engulfing. It had a closing breakout, and it's gapping up a buck and change. So that's not excessive. So say that's my goal pre-market is first looking at our inventory, making sure we have no disasters or gifts. Oh, I just noticed, I forgot to mention Hexo. Hexo we're in as a core trade, cannabis. 373. This trades Groupon. It trades like a penny stock. But that's a bullish gap though. Could go to 4.25. I'm just not crazy about the pattern. Good, nice breakout on the weekly. Look at this. This is a beautiful W retest, bottoming tail, engulfing bar, price void. That's a picture of a beautiful reversal right there. But there's no entry on the daily. FEYE 1571, gapping down, no interest. Flex we'll come back to. Amgen's a bio. Tandem 68 bucks. That's bullish. There, that's a bullish gap. Putting that in a window. But is that a bio though? Tandem diabetes. Yeah, but is that, if I look it up on Yahoo Finance, is it considered? Yeah, Hilton looks great. I like it. So something's up in the hotel. All right, thanks, Alex, trader. Yeah, I just didn't want to trade a biotech, but yeah, equipment, sure. No, Hilton looks fantastic. And so something's up because our Marriott is up nice. I'm putting that in a window. It looks great. I hope everyone is seeing what a tier 1 setup is for us. Hilton, I'm just checking earnings, 5.1. Okay, so that was earnings also, I'm assuming. We like the ones that gap just over resistance, create a shock pattern, and that have room to run. This is fantastic, all time frames. I'm going to get rid of Apple here because I have it on my other computer. And I'm putting Hilton there. And it's a bullish pre-market. This is a 5-minute high. It looks great. Here, I'm going to post it to our swing folks just to get them ready. All right, so that's what I just posted to Telegram. Twilio, it gaps too much. Clorox, 153, that's a nasty gap. So we gotta see what's going on. AMD I like, 29 bucks. Target, 30 or higher. 30, 31, I don't know. But that's a nice gap. So yeah, we got a couple nice gaps today. I'm putting them on all these little thumbnails. ISRG, that's from Alex mentioned yesterday. Little bear 1, 2, 3. With a bullish market, I like those better, you know, because it's only getting triggered if it's weak. This is the one I found yesterday, a little bit too late. I love the breakdown failure, bottoming action, volume. That was beautiful alignment. All right, so I've got through all my earnings. TIFF I have here as just a breakout candidate on the daily. These are left over now. Synopsis, still a nice uptrend. CRM, it's a bull. I like the bullish engulfing, but it's here at the top of the range. It has to go sideways more, but it's worth watching. FO, we found yesterday. It was on traders list. This is the water ETF. It looks great. It's light volume, but you know, so what if it's a core trade ETF? EXP was on the list. You know, from the infrastructure, so we'll keep that. TPC looks good. This has room. That looks good. So those were the finalists from Traders Infrastructure list. Triple L yesterday, daily, weekly, monthly. We're in alignment. I like the retest here on the monthly. Had earnings yesterday, negated, you know, the morning weakness. Google's still on our list. You know what? The entry was still posted, so I'm gonna text our folks right now, the weekly, and say hold off on Google because I want to manually give the green light. Yeah, we have Fed today, that's right. And, you know, we all know nothing's ACN. This was Alex's pick the other day. It looks great. IWM, we're in the ETF trader, and spiders we stopped out of. Here's our lift up 85 cents. All right, 927. So, the trader emailed me a question, and I said, let's talk about it together in here. It was on Lima Hotel. And he was asking me, okay, he says, help me understand how to put this in context. Why? Because I said it's over 100% retracement on the daily. And you know, we don't enter after 9 up bars, 100% retracement, even though it's still bullish. Just because something's bullish doesn't mean that it's a logical entry. So he says, help me understand, wide range bar on positive earnings. Okay, but it's a wide range bar after 8 up bars and 100% retracement. Pretty much about to break past high. Well, again, same answer. We don't buy breakouts after 100% retracement. We do them after consolidations or a higher low, or let it break out and buy a pullback to support. Wouldn't a retracement on WRB on earnings best be evaluated differently than working its way back up grinding? No, I don't care the reason for the bars. I interpret it the same. I get the 100% is more than we'd like to see, but where else could we get in? Well, if it's a day trade, look at your 15-minute chart, and you could do it right over this resistance. So for a day trade, right over there, over 131.40, or even the day's high. But for a swing trade, you're asking me, then when can I get in? And my answer is, I don't know. I'll tell you when I see it. But it could be one of the things I said. And it's technically not a 1, 2, 3 because the topping tail is too big. But it's just, it ain't a swing pattern. End of story. It might become one. All right, look at Hilton. Let's focus now on our best gappers. And I'd say Hilton is a beauty. I could say Jason. So it's already up over $2 just from the pre-market lows here.